The first thing is the people. Obviously, this business is about the connections you make and the people you trust. And the most important people that I trust in this industry are at this company.
The new beginning. Other companies are doing things the same way they've always done them. And so having a new opportunity to do things a different way is what really intrigued me.
I'd say from a sales perspective, what I love most is that we have really the best of both worlds. So we're a big multi-billion-dollar international company with great financials, but on the other side, we also feel very much like the small little family-run company.
I like the safety of First American, but they've got a human side to them, you know, a little softer, gentler approach, and I really appreciate that, and they've really given me a great opportunity to go out and try and build something for them.
In Colorado, guess what? We're all local. There's 4 local underwriters, and together the other day we have almost 125 years of local underwriting experience in Colorado. And I tell that to people all the time, and that's really the big difference. We can make local decisions quickly to get that deal to the closing table. That's the big difference.
We're a team, and we support each other and look out for each other, and it really promotes more business for us.
First American is all about a work-life balance, and the leadership is incredible because they truly care about the customers or the associates that work here.
This is our customer service department, and the marketing support services that are just completely robust. Marketing is a challenge for a lot of real estate brokers. It's something they have to do, but it takes a lot of time. It can be expensive, and we have a fulfillment solution that is far and away better than anything else that our competitors have to offer.
The leadership is very down to earth, and they move very quickly. So anytime I've needed something or had to support a customer or had to make a decision that maybe cost the company money or whatever, they're very quick to make a decision on that stuff.
You're working with people who have been in this market, in the Colorado market, for 30 plus years. At one point, First American was underwriting almost 70% of all transactions in Colorado, and some of those very people were working on those files.
I really believe our people are passionate about our company and do it better.
What if there was no car legal hotline? Just one call to a lawyer would cost you at least $250 per hour. What if you only had unreliable or hard to understand industry reports to include in your business plans and share with your consumers? What if there was not an organized association to fight for your right to conduct business in a fair and equitable manner and to protect consumers' private property rights? What if CAR never changes with the times to meet our members' needs? You don't have to ask what if anymore, because over the last 18 months, CAR expanded the legal hotline 2 more hours a week to help answer your legal questions. CAR created a research program that provides Colorado realtors with accurate and reliable quarterly housing market reports. CAR successfully advocates on Capitol Hill each year on behalf of all Colorado realtors and private property owners, so you can focus on your business. CAR created a professional development program that focuses on timely and relevant real estate issues through our live webcast program. CAR established relationships with many real estate-related companies to give you member discounts on things you actually use and need to be successful. CAR produced phenomenal networking and professional development opportunities in 2013 through its meetings and events. CAR's quest to make your state association better, stronger, more relevant, and able to withstand future challenges of the real estate industry is a never-ending journey. We have successfully put many solid processes, programs, and services in place. Now it's time to take the next steps of our journey by adding more value to your membership. Our vision is to create more opportunities for Colorado realtors to lower their risk by expanding the hours of the Car Legal Hotline. Provide more reliable industry and consumer data to make you more confident and productive in the sales process. Produce even more live webcasts you can apply to your ever-changing business and help you remain on top of your game. Build a deeper political war chest to help preserve the industry and protect your consumers' rights. Increase our outreach to our local realtor associations, MLSs, and members. Take advantage of your car benefits and features. Visit coloradorealtors.com for details.
The first thing is the people. Obviously, this business is about the connections you make and the people you trust. And the most important people that I trust in this industry are at this company.
The new beginning. Other companies are doing things the same way they've always done them. And so having a new opportunity to do things a different way is what really intrigued me.
I'd say from a sales perspective, what I love most is that we have really the best of both worlds. So we're a big multi-billion-dollar international company with great financials, but on the other side, we also feel very much like the small little family-run company.
I like the safety of First American, but they've got a human side to them, you know, a little softer, gentler approach, and I really appreciate that, and they've really given me a great opportunity to go out and try and build something for them.
In Colorado, guess what? We're all local. There's 4 local underwriters, and together the other day we have almost 125 years of local underwriting experience in Colorado. And I tell that to people all the time, and that's really the big difference. We can make local decisions quickly to get that deal to the closing table. That's the big difference.
We're a team, and we support each other and look out for each other, and it really promotes more business for us.
First American is all about a work-life balance, and the leadership is incredible because they truly care about the customers or the associates that work here.
This is our customer service department, and the marketing support services that are just completely robust. Marketing is a challenge for a lot of real estate brokers. It's something they have to do, but it takes a lot of time. It can be expensive, and we have a fulfillment solution that is far and away better than anything else that our competitors have to offer.
The leadership is very down to earth, and they move very quickly. So anytime I've needed something or had to support a customer or had to make a decision that maybe cost the company money or whatever, they're very quick to make a decision on that stuff.
You're working with people who have been in this market, in the Colorado market, for 30 plus years. At one point, First American was underwriting almost 70% of all transactions in Colorado, and some of those very people were working on those files.
I really believe our people are passionate about our company and do it better.
Good morning. I'm Julie Woodfin, Professional Development Coordinator, and I wanted to thank you for joining us today. Today we'll be reviewing the second quarter housing data collected through the Colorado Association of Realtors Housing Research Program. We're pleased to have with us as our moderator this morning, Karen Levine, Car Media spokesperson with the Housing and Research Program. Karen will provide a breakdown of statewide indicators and a summary of regional information collected in the second quarter of 2014. Karen and the other panelists will also be available to answer your questions, and I look forward to turning the program over to her in just a few moments. But first, I wanted to pass along a quick thank you to Bank of America for sponsoring the online presentation of our quarterly reports. And also, of course, to First American Title for presenting our webcast program, which is a part of our professional development initiative here at CAR. A representative from First American is with us today to tell us about some of the services they offer.
Hi, I'm Lisa Spence with First American Title. Today I would like to introduce you to Cost First. Cost First is a software application that provides instant net sheets to your sellers and buyers. Once you sign up for this software, you will be able to customize it with your picture and your contact information. All the closing figures are already in place, and all you need to do is add a few fields like the address, sales price, projected closing date, and it automatically calculates the rest. You then can save it, print it, or email it to your client. This site works great for buyers' closing costs as well. It will calculate the closing costs as well as their payment. What is also great about this site is that you can get a free app for your iPhone or Droid and have it available to you while you are showing property to your buyers. You will be able to compare closing costs and payments for each house, all done through your fingertips. To sign up for this, all you need to do is go to www.costfirst.com and you will receive instant registration. Thank you and hope you enjoy another wonderful tool offered by First American Title.
Thank you again to First American for their ongoing support. Now before we get started, I have just a few housekeeping items. We've allocated an hour for today's presentation, though depending on the questions we receive, we may go a little longer than that. We will have a 10-minute break scheduled at around 9:30. If you have any questions along the way, feel free to type those in according to the instructions there on your screen. What we do is collect those, review them during the break, and then we'll answer as many as we can when we return. And finally, a link to a copy of the reports that will be referenced today can be accessed in the area below the video stream you're watching right now. If you have any questions or problems accessing those, please just send a note to the email address in front of you there on your screen, and we'll make sure you get a copy of those. Our moderator this morning, who will also introduce our other two guests, is Karen Levine. She is a native of the Denver metro area and has over 26 years of experience. She is very passionate about being a realtor and continuing education, and is currently the vice chair of the convention committee. Karen is also a CAR media spokesperson, which brings her here today representing the Housing and Research Program. Without any further delay, I'll turn the program over to her.
Thank you, Julie, for the introduction. It's a pleasure to be here today to review the housing statistics for Q2. But before we dive in, I'd like to introduce to you two of our CAR spokespersons, Dave Kupernick and Francie Martinez, who are also here today with us to bring a closer look to their respective local markets. Dave Kupernick is a owner-broker of 24K Real Estate in Parker, and he has been a realtor for 13 years and has served in numerous leadership positions, including president of the Douglas Elbert Realtor Association, where he also served as a director for 9 years. He is the past CAR director and has been on the CAR Legislative Policy Committee since 2010. And this past year, you served as chair of the Housing Subcommittee. Terrific. He has lived in the southern metro area since 1989, and we look forward to hearing from Dave regarding what's happening in the Douglas Elbert market in the south down there in metro area. So that'll be exciting. Also joining us today to bring us a look at the northern Colorado housing climate is Francie Martinez. And Francie, you're a broker associate of Elevations Real Estate, LLC, and currently serve as the chair of the Fort Collins Board of Realtors. We also, Francie also serves as the board of directors for Fort Collins for the past 2 years and has been a realtor for 8 years. Francie received the Rising Star Award in 2007. What an excellent accomplishment, and the 100% Club at the RE/MAX in 2011. So thank you guys for joining us today, and we look forward to hearing from you in a few minutes regarding your reports. So now we'd like to take a look at the statewide statistics, and you should be seeing up on your screen the total market overview. And there's just a couple of things we wanted to highlight for you today regarding the local market, statewide. I shouldn't say the local market, the statewide market. Most areas of Colorado experienced additional increases in housing prices the second quarter of 2014 compared to the same quarter in 2013. The median price of the single-family homes and condominium townhomes combined rose 6% statewide to $259,000 compared to the second quarter of 2013. And all areas of the state showed increases over the first quarter of the year. So we're definitely seeing improvement. So one of the effects of rising prices is a decline in affordability as wages and incomes fail to keep pace with the increased cost of housing. So I think that you guys are probably feeling that in your markets. Overall, sales declined 5% for single-family homes and rose 19% for condominiums and townhomes. Metro Denver had the largest increase in condominium townhome sales at 29%, which I think that is a significant number that I'm sure we'll get some questions on later. And then while the Southwest District or region saw the deepest decline of a negative 9%. In all regions except the Mountain and the Northwest region, the median price for condominium townhomes increased more than the single-family homes. So we're definitely seeing a shift, and I'm sure that is an effect of our inventory. So with that said, the single-family homes dropped 4% statewide, while the number of condominium homes and condominium and townhomes listings grew statewide 17%. So definitely an increase there. It might behoove us at this point to just give you a sense of the other reports that are in your packet. And these are available at the CAR website, coloradorealtors.com. And then as we get talking about more local markets, we'll tell you where you can find a even greater breakdown. But as we move through inventory, we talked about that condominiums listings have increased 17% statewide. New listings of single-family homes flattened out or declined in most areas of the state when comparing Q2 2014 to 2Q 2013. The drop is primarily driven by the Metro Denver region, which saw an 8% negative decline, and then the Northeast region saw a 2% decline. So we definitely saw that effect, as we would say, along the Front Range. The Northwest and Southwest regions of the state had the opposite pattern. The Mountain and Southwest regions saw increases in new listings in both categories. The statewide number of total active listings at the end of the second quarter of 35,585 properties represents about a 4.5 month supply and is an increase of 30% in available inventory compared to the first quarter of 2014. And I guess we can account that one for the season changes as well as improvement overall in the marketplace. Currently, I had up your median sales price, which you guys can be taking a look at. Then we have our average sales price statewide, which will give you some additional information. Days on market continued to trend downward. We saw a decrease of 7% for single-family homes and a decrease of 27% for condominium and townhomes. Overall, looking back over the last 12 months, we can see that in most areas of Colorado, the housing market is getting stronger, as sellers who were probably waiting for prices to recover are now entering our market. Hopefully that trend will continue. With more inventory, some of the frustration that the buyers have experienced by being outbid or seeing homes disappear virtually the moment they hit the market should start to clear up. So let's now hear from Dave and how South Metro market is doing. Dave?
It'll be an interesting discussion. There's a couple of trends that match the statewide ones, and then obviously with the micro market, the local market changes a little bit. One of those dynamics is inventory. So we'll talk a little bit about that here in a minute. Overall, the market has picked up significantly in the second quarter versus the first. New construction is still strong in the area. However, there is standing inventory in most new developments. Home prices continue to appreciate, up around 8 to 9% for single-family home and as much as 14% for the condo townhome market. Overall, the median sales price in the South Metro Douglas County area is up actually 56% from the end of 2011, which was its low point there. And the average sold price has increased 20% since the first quarter of 2012, showing a long-term trend of appreciation, and also pointing out the fact that the higher price points are getting busier as well. So the health of the market is spreading across a broader range. The average sold price, another statistic on that, is that it continues to exceed 99% of the asking price, which obviously points to the strength of the market as well. Days on market continue to trend downward this year, about 30% from last year, to an average of 30 to 40 days. Getting down into more of your micro markets, areas such as Highlands Ranch are measured more in a matter of a week's worth of inventory, depending upon the price point you're looking at. So overall, inventory continues to be tight in our area. Potential sellers, I think, are to some degree concerned with the ability to find replacement homes, and we are hearing some stories of potential buyers kind of being a little more reserved to come on the market because they hear of the spring rush and the competition of 10 offers for every house that's on the market. So that is having some impact in terms of that. Interesting statistic that I thought was very encouraging and has been bolstered by some of the economic reports we've seen recently is the lender-mediated sales data. Foreclosures, bank-owned, HUD, short sales, those transactions are down volume-wise 40% from this time last year. So that continues to show a strength in our general economy. Employment in the area is very favorable. Some good examples of that would be the construction of the new Charles Schwab campus in the Douglas County area, as well as Kaiser Permanente opening a new campus as well. It's interesting to note that the new mortgage qualifying rules that went into effect in January are having an impact in our area. We're seeing increased underwriting timelines and tighter criteria. It's making it tougher for buyers to obtain a loan in the first place, and also responsible for causing delays and in some cases actually fallen transactions. So that continues to be something that we want to watch and see what we can do on our end as CAR to be involved in helping with that. The dynamics of single family versus multifamily are very interesting. You mentioned earlier the affordability index. Obviously that is based on, if you take the average income for a family, that's their ability to afford a median priced home in their area. And we are seeing a drop in the affordability index, more so even in the single family side than just the townhome condo market. In fact, for single families, it's actually dropped below 100 for the first time since the recession. So that's an interesting note, and that statistic basically says at average income family is having a difficult time affording a medium-priced home. So as you mentioned, that's something that's having an impact due to the failure of wages and income to keep pace with the increased valuation. Current trends that we're seeing a bit of reduction in buyer traffic through the month of July. That's a pretty traditional timeline for us. We see a busier spring, a little bit quieter early summer, and then it tends to pick up more towards the end of the summer. Some of the challenges we're also seeing are increase in fallen contracts due to a number of different reasons. In talking with other professionals, we see buyers stretching to be able to make that offer that will win them the bid in the process, and then sometimes we see a couple of results of that. We'd like to always see it be successful. There are times, though, where perhaps the buyer afterwards looks back at the payment that they've committed to in order to win that bid, and there is a bit of buyer's remorse that can take place. We're also seeing the possibility where in the rush to get everything done in the competitive market, the bid might be put forward, and then looking back at the qualification after the fact for the buyer, the lending criteria may have changed, and that's causing some situations. The other impact we're seeing in our area is inspections. There's a tendency in some cases for bolder buyers to be a little bit more emboldened in what they're requesting in the inspection, just simply due to the fact that they've paid a premium for the property, and that's in line with their expectation. However, on the flip side of that, we might see where the seller is a little bit emboldened that maybe they don't feel they have to just do a blanket acceptance of those issues, because they feel that if they were to go back on the market, there's a strong chance they could perform just as well. So we're seeing those as challenges in the area. Another issue that we're seeing recently is non-warrantable properties. We're seeing an increase in those for a number of reasons, and we can maybe get into that later, but there's three main reasons that we're seeing for those. Sometimes it's the owner versus non-owner occupants, and then there's a couple other reasons as well. But overall, as I mentioned, the second quarter has really put us back on path towards a more traditional year, where the second quarter is busy, things slow a little in the summer in the early part and pick back up in late August and September. And there's a general expectation, kind of as a closing comment, there's a general expectation going forward that the third and fourth quarter will be better this year than last year, mostly due to the fact that the government shutdown did definitely have an impact last year, and we're not anticipating any kind of extreme outside influence this year like we saw last year.
Excellent. Dave, that was a fabulous report, and I'm sure many of you listening today can gather, even though Dave's report is specific to the Douglas, Elbert, and South Metro area, that you're seeing a lot of those trends in your markets where you guys are, and a lot of the points that he pointed out will be helpful for you in knowing how to better assist your consumers as we go forward into third and fourth quarter, huh? Excellent. Well, Francie, it's your turn to give us a little bit of an overview on what's happening in northern Colorado. And before we got started today, you talked about northern Colorado market is really diverse.
It is. So first of all, thank you for having me. It's nice to be here. But it is one of the things when we look at the Northeast region, we have all the markets that exist in the state within our region. So we have rural, we have suburban, we have investment. So it's difficult to look at an overall statistic for the Northeast region and know that it actually applies to every part of it. So, I know out on the Eastern Plains, Sterling, those areas, their market is vastly different than where I practice in Fort Collins. So I think when we look at those reports and those statistics, it's important to understand, we have mountain properties, we have everything in our region, and it all plays into those statistics. So a couple of things that I feel like really have affected the change from Q1 to Q2 this year, and a lot of it Dave brought up, like you said, it kind of exists everywhere, but our rental market is so strong, our vacancy rates are so low that investors compete so hard in those, I would say, even the median and lower price ranges in the Fort Collins area specifically, but even Loveland and Greeley, and I'm sure Boulder, they compete there, so your traditional buyer is actually at a disadvantage in those price ranges. And then we get into the affordability issue where, our median wage earner in Fort Collins doesn't qualify for our median priced home. And so, we have a lot of drive till you qualify there. And as a person who works in an area like that, sometimes that doesn't feel equitable. And so I think that's something that buyers face, and they're facing it everywhere in the state. And when investors then come in and pay cash, and they waive inspection, or they do things that a traditional buyer really can't do so much, it really does put that traditional buyer at a bit of a disadvantage. So I think it's become incumbent on our profession to educate buyers on that. And what I see Q2 over Q1 is buyers just relaxed into that frenzied market a little more. They actually understood it better. It came on so fast in Q1, and there were lines at doors to show houses, and that's not a comfortable position for a buyer to be in. So I think they just have become more educated and have relaxed a little bit. But we're facing all of the same things. We have low inventory. So, buyers do feel pressure to go as high as they can go or really stretch. And, that's not the most comfortable position for every buyer to be in. And so, I think we really need to work with buyers and sellers to say, hey, it is a different scenario these days. And, just like Dave was saying, when your seller says, well, I don't have to do anything on inspection because, I have 10 offers waiting. It's like, well, you still have to put that house back on the market. And when your buyer says, well, I paid full price, so I should get everything, well, there might be 10 other offers waiting there. So I think, there's a lot of education going on. And I think paying very close attention to your market statistics in your specific area helps you educate your buyers and sellers that way. So A couple of other things, you know, we talk a lot about buyer traffic, and we too, especially right at the end of quarter one and the beginning of quarter two, we were doing incredible sales volume, but we were having a lot of deals fall. And I think part of the reason is buyers did feel so frenzied. They maybe, you know, had a little buyer's remorse 3 days later, or the payment was higher than they thought, or things like that. So I think what's happening is now those buyers are saying, okay, it has to feel really right for me. And I think that's helping that frenzied feeling everybody had at the beginning of Q2. I would like to speak a little bit more on the affordability, because I think it's something we're facing statewide. And, you know, we talk a lot about affordability being that 30% and lower. But really, affordability now is affecting even above our median wage earners. And so how do we, you know, at CAR and in our local markets, how do we affect that? I think those are good questions to think about, because I think given the year, as Dave said, that we are looking to have, I don't think that question's going to get adjusted by itself. I think it's going to take some effort and some probably some action on our part. So it's something I think we should be looking at. And, you know, I would say the challenges right now are far outweighed by how great it is to be working in a market where we actually don't feel like we are, you know, for a few years, I mean, I think we all felt like it was just hanging on. And so I think it's such a great place to be. We're all over our state. We are seeing improvement, and more in some areas than others, but we are seeing kind of the ability to do our jobs and provide our services without feeling that kind of tension around it. So I'm really grateful for that. Other than that, you know, I mean, Dave covered, your report was really good, Dave. So, I mean, he covered so much in that, and it really does play out. I will say days on market are the thing, that is the thing in our market that toys with people the most. And when I read the statistics, like I said, for all of the Northeast District, those days on market don't hold true. I know in Fort Collins, I don't think they hold true in Boulder. So it's like we are seeing, much like Highlands Ranch, many of our price ranges are measured in days. And for a few weeks, they were almost measured in hours. And so it's nice to see that evening out a little bit, but it's still, I mean, your buyers have to be engaged and they have to be ready to go.
Well, it's interesting. We've been talking a lot about affordability, and I'm going to be a little bit bold and go off script, but in your packet of research reports that we provide to you as members, we've broken out condo and townhomes, and you're going to see those statistics have really fluctuated greatly over the last 12 months. And I think that that's because condo townhomes are meeting the need of the affordability, whereas as a market improves, people shy away from a condo townhome investment because they got hurt the worst when the market plummeted. And now they're starting to recover, and they provide at least a place where people can put their money and be buying something for themselves where they're not paying rents. And as you mentioned, Francie, rents are being pushed to the hilt high, and we're starting to see buyers understand that if I'm going to pay $1,500 a month in rent, maybe putting money into a condo or townhome is a really wise investment. So I think our statistics are starting to reflect that, and hopefully that's helping to meet the need. And then I'm sure throughout our state, many of you are seeing local city and county districts that are providing some affordable housing to our consumers. And one area that many of us should consider, I think, is the products that Chaffa offers, because it gets us away from the non-warrantable situation and gives us some other things to consider. So at this point, I think that we are going to turn it over to some YouTube videos that have been prepared by some of our other fellow spokespeople throughout the state, and they're going to give you guys an overview of what's happening in their parts of Colorado.
I'm Kelly Moy, and I'm one of your spokespersons for Northeast District for the Colorado Association of Realtors. Here chatting with you today about the second quarter and what's happened in our market. And it was a whole lot like the first quarter. Very fast, very hot, prices went up, days on the market went down, inventory remains low. And it's pretty exciting to see. Our market is very robust right now. If you look at last year, days on the market at this time of year was about 60. This year, we're actually seeing in most of our regions about 33 days on the market. So houses are selling even faster than they did last year. Prices are going up anywhere from 5 to 10%, depending on which area you're in. Either way, a very healthy increase from this time last year. Gosh, Louisville actually went up 14% since last May. So you'll get all those stats soon here through the Colorado Association of Realtors and have them. I think you'll be really impressed about how strong our market is right now. Some trends that I've noticed here in the Northeast District, there are 3 in particular that I've actually never seen in our market before. And I think it is based on how quickly homes are selling and the frenetic pace that our market's moving. The first trend is the coming soon sign. Some realtors are putting coming soon signs out before they actually put their listings in the MLS, and this has been happening for about a year or so. But what we're finding now is the Real Estate Commission actually made a statement as to how they want us to handle coming soon signs and what the right thing is for our clients. So if you're not sure, then contact the Real Estate Commission so you can make sure you're doing it correctly. The second trend that I've noticed is that we're seeing a lot of buyers are having such a challenging time actually getting listings that they're putting multiple offers on multiple houses at the same time. So instead of in good faith writing one offer for one property that they intend to buy, they're writing 5 contracts on 5 properties and letting 4 go. So you'll notice with the stats sometimes that the under contracts look really high, but the closed sales are actually lower, and that's because a whole bunch of properties fall out of contract right as soon as they get in, and that's the reason why. Again, the Real Estate Commission is looking at how we're supposed to handle that situation to make sure that we are effectively representing our clients correctly when they want to do something like this. And finally, the trend that I've noticed up here is actually an issue with the way we get our offers to listing agents if you're a buyer's agent, or the other way around. And that is that we have the opportunity to use a lot of different electronic signature programs, which has been wonderful and made it a lot easier than faxing or delivering contracts to each other. But there are several different programs to choose from. And when you're in a multiple offer situation, we're finding that certain listing agents are really only wanting to work with the electronic program that they're familiar with. And I think a lot of people are worried that it may be affecting their buyers' chances of getting that home, when really it absolutely shouldn't. So it's a matter of technology and making sure we all understand all programs out there and can deal with and work with all of them. Again, the Real Estate Commission is also looking at this to make sure that we are representing our sellers and our buyers correctly, and that we're doing our jobs well. So we're a lot of trends coming out of what is really a hot market, and that's all a good thing. But they are issues that do need to be addressed, and they will be. So keep posted for that. Look for the stats from CAR. That's coming up shortly. And work hard. Have a great year. Enjoy this market as long as it lasts.
Hi, I'm Sandy Borman, and I'm a spokesperson for the Colorado Association of Realtors. I'm located in Grand Junction, Colorado, and I'm a member of the Grand Junction Area Realtor Association. I'd like to provide you today a second quarter market update. As our temperatures have heated up here in western Colorado, so has our real estate market. Home prices are up almost 12% over the same time last year. In addition, home sales have increased drastically since our first quarter, from 448 homes sold in the first quarter to 749 homes sold in the second quarter. The average sales price in our area has increased significantly, and it is now at around $230,000 versus less than $200,000 in the same period last year. One exciting thing for our market right now is the increase in activity over the $500,000 mark. We had 33 homes sold in that range in the second quarter of 2014 versus only 18 last year in 2013. Another significant milestone is we had a $3 million property close in the month of May that was a residential home. There really is not a lot of local influence driving the real estate market as far as new industry moving into the area. So I do believe that the slow first quarter combined with just the increase in home sales nationally has helped our local home market pick up drastically. We're seeing great showing activity right now, and I do believe that our third quarter will remain strong. I'm Sandy Borman, again reporting for the Colorado Association of Realtors. Thank you.
Well, that was a definitely mixed bag of reports throughout the state, and I really appreciate hearing from Kelly and Sandy. Kelly did a great job, don't you think, guys, highlighting the trends that we're seeing both metro-wide and statewide, which was excellent, and definitely stuff that you guys can utilize in your business day to day as you're meeting with your buyers and sellers. And Sandy, I just wanted to say it's exciting to hear that the Northwest District is seeing improvement. I know that that market has been lagging a little bit behind, and they were a little bit jealous of the Front Range there for a while when all we talked about was lack of inventory and rising prices, and now they have bragging rights. So that is just terrific. We were also excited to get a report out of Colorado Springs from Jay Gupta, one of our spokespeople. And I'm just going to read his report so that you guys get a sense of what's happening down in the Southeast District. Colorado Springs market continues to improve. Last month, the inventory of homes listed for sale rose to 4,233 properties, close to the level in June of 2005, which is a great comparison when you look at June 2014 and the recovery from 2005. So kind of a 9-year history there. And 9.4% higher than June of last year. So definitely the Springs is seeing an improving market. The home sales in June totaled 1,192 properties, making it the 6th highest month of June in sales historically, and with 8% increase over the same month last year. Again, great statistics showing improvement. Also, last month's sales volume of over 318 million made it the 3rd best month of June in sales volume ever. So definitely, I think the folks in Colorado Springs are smiling. You've got that, Dave. Almost 94% of the sales last month were priced under $400,000, and a mere 0.5% were priced over $800,000. There is noticeably low inventory of homes listed for sale under $200,000, with only a 1.5 month supply. However, there is a healthy supply of listings priced over $400,000. It is significant to note that last month, the number of average days on market for sold properties was 82 days, and this number is indeed in a very reasonable range. However, the average days on market in June of 2013 was 62 days, which might cause you to question what's going on in Colorado Springs. So maybe we'll get a chance to hear from Dave third quarter, or from Jay third quarter, and see what that trend shows us. Also in June of 2014, 23% of the sold properties were sold in 30 days from the date of listing, compared to 48.2% a year ago. So again, we're seeing trends throughout the state, which are going to be really helpful for us as we move into that third quarter. We want to thank all of you for submitting your videos and updates, and we appreciate you giving us a peek into your local markets. At this time, we're going to take a 10-minute break, and we invite you all that are listening today to submit your questions, and we'll come back with Francie and Dave and myself, and we'll see if we can get those questions answered for you. And as we collect those questions and get ready to address them, we'll be back shortly. So you guys all stick around.
The first thing is the people. Obviously, this business is about the connections you make and the people you trust. And the most important people that I trust in this industry are at this company.
The new beginning. Other companies are doing things the same way they've always done them. And so having a new opportunity to do things a different way is what really intrigued me.
I'd say from a sales perspective, what I love most is that we have really the best of both worlds. So we're a big multi-billion-dollar international company with great financials, but on the other side, we also feel very much like the small little family-run company.
I like the safety of First American, but they've got a human side to them, you know, a little softer, gentler approach, and I really appreciate that, and they've really given me a great opportunity to go out and try and build something for them.
In Colorado, guess what? We're all local. There's 4 local underwriters, and together the other day we have in almost 125 years of local underwriting experience in Colorado. And I tell that to people all the time, and that's really the big difference. We can make local decisions quickly to get that deal to the closing table. That's the big difference.
We're a team, and we support each other and look out for each other, and it really promotes more business for us.
First American is all about a work-life balance, and the leadership is incredible because they truly care about the customers or the associates that work here.
This is our customer service department, and the marketing support services that are just completely robust. Marketing is a challenge for a lot of real estate brokers. It's something they have to do, but it takes a lot of time. It can be expensive, and we have a fulfillment solution that is far and away better than anything else that our competitors have to offer.
The leadership is very down to earth, and they move very quickly. So anytime I've needed something or had to support a customer or had to make a decision that maybe cost the company money or whatever, they're very quick to make a decision on that stuff.
You're working with people who have been in this market, in the Colorado market, for 30 plus years. At one point, First American was underwriting almost 70% of all transactions in Colorado, and some of those very people were working on those files.
I really believe our people are passionate about our company and do it better.
What if there was no car legal hotline? Just one call to a lawyer would cost you at least $250 per hour. What if you only had unreliable or hard to understand industry reports to include in your business plans and share with your consumers? What if there was not an organized association to fight for your right to conduct business in a fair and equitable manner and to protect consumers' private property rights? What if CAR never changes with the times to meet our members' needs? You don't have to ask what if anymore, because over the last 18 months, CAR expanded the legal hotline 2 more hours a week to help answer your legal questions. CAR created a research program that provides Colorado realtors with accurate and reliable quarterly housing market reports. CAR successfully advocates on Capitol Hill each year on behalf of all Colorado realtors and private property owners, so you can focus on your business. CAR created a professional development program that focuses on timely and relevant real estate issues through our live webcast program. CAR established relationships with many real estate-related companies to give you member discounts on things you actually use and need to be successful. CAR produced phenomenal networking and professional development opportunities in 2013 through its meetings and events. CAR's quest to make your state association better, stronger, more relevant, and able to withstand future challenges of the real estate industry is a never-ending journey. We have successfully put many solid processes, programs, and services in place. Now it's time to take the next steps of our journey by adding more value to your membership. Our vision is to create more opportunities for Colorado realtors to lower their risk by expanding the hours of the CAR Legal Hotline, provide more reliable industry and consumer data to make you more confident and productive in the sales process. Produce even more live webcasts you can apply to your ever-changing business and help you remain on top of your game. Build a deeper political war chest to help preserve the industry and protect your consumers' rights. Increase our outreach to our local realtor associations, MLSs, and members. Take advantage of your car benefits and features. Visit coloradorealtors.com for details.
The first thing is the people. Obviously, this business is about the connections you make and the people you trust. And the most important people that I trust in this industry are at this company.
The new beginning. Other companies are doing things the same way they've always done them. And so having a new opportunity to do things a different way is what really intrigued me.
I'd say from a sales perspective, what I love most is that we have really the best of both worlds. So we're a big multi-billion-dollar international company with great financials, but on the other side, we also feel very much like the small little family-run company.
I like the safety of First American, but they've got a human side to them, you know, a little softer, gentler approach, and I really appreciate that, and they've really given me a great opportunity to go out and try and build something for them.
In Colorado, guess what? We're all local. There's 4 local underwriters, and together the other day we have almost 125 years of local underwriting experience in Colorado. And I tell that to people all the time, and that's really the big difference. We can make local decisions quickly to get that deal to the closing table. That's the big difference.
We're a team, and we support each other and look out for each other, and it really promotes more business for us.
First American is all about a work-life balance, and the leadership is incredible because they truly care about the customers or the associates that work here.
This is our customer service department, and the marketing support services that are just completely robust. Marketing is a challenge for a lot of real estate brokers. It's something they have to do, but it takes a lot of time. It can be expensive, and we have a fulfillment solution that is far and away better than anything else that our competitors have to offer.
The leadership is very down to earth, and they move very quickly. So anytime I've needed something or had to support a customer or had to make a decision that maybe cost the company money or whatever, they're very quick to make a decision on that stuff.
You're working with people who have been in this market, in the Colorado market, for 30 plus years. At one point, First American was underwriting almost 70% of all transactions in Colorado, and some of those very people were working on those files.
I really believe our people are passionate about our company and do it better.
Thank you all for the questions you've sent in and staying with us. I think we are going to have an amazing discussion here as we hash through some of the questions that our members have sent us, Dave and Francie, and I'm kind of excited to get your perspectives on these questions. Just a note, the screen that you saw when we came back online gives you the web address for you to go and download both statewide reports, regional reports, and then if you're looking to hone down even deeper, contact your local association or board, and they will have local market reports available to you. And all of this is brought to you by the Colorado Association of Realtors as a member benefit. And so as we move into the questions, our goal here today is to empower you guys that are watching this webinar to take this information and use it to go make more money, to sell more houses, and to empower the consumer to get that house they're looking for, to get their home sold. So let's delve into some of these questions. The first question that we received was, what signals should I watch for to determine whether my local market is improving? What kind of things are you seeing, Dave, that would be signals?
I would say, in my opinion, I tend to track inventory. I tend to track average price, median price, as well as days on market. And I tend to track it literally on a weekly basis. And where I find strong value in these reports is it's really an affirmation of a longer period of accumulation of those reports to verify the trends that I think I'm seeing locally.
Excellent, excellent. Good point. Anything you'd add, Francie, to that
No,
you're
and
seeing?
I think what's especially important with how quickly our market is changing right now is that you are doing that yourself on a weekly basis but then you're also comparing that when we come out with a quarterly report at CAR that you can compare your numbers and see where you're going with it. But I absolutely agree. Days on market is huge, I think, to watch how the market changes. And then obviously prices and that. So, but I think, as realtors, part of our job is to take a look when we know something's changing, take a look at those numbers and be able to give them to our clients.
To confirm kind of what we're feeling, right?
Right, exactly.
Also, I'm sure both of you guys have an opportunity either through your local association or through your brokerages that you kind of do hall talk, kind of, are you guys seeing, are you guys feeling? And that's a really good resource. A lot of times, if you're in a big office, you'll have highly experienced people that maybe have gone through some of these trends and seen the signals, so call on them for assistance as well. So our next question is, do you feel the new ability to pay rules have slowed sales this year now that it has been implemented for about 6 months? And I think, Dave, you touched on that a little bit, so I'd love for you to elaborate.
Yeah, I dove right into that one, huh?
Yeah. Thank you.
I would say I think it has had an impact. The phrase slowed sales, I think, is a difficult one to really attach to because sales are so busy. At the same time, I think there may have been potential for more sales. I think there's definitely buyers that have lost out on properties as a result of it. And I think some of us are facing challenges. And while it's a great market and there's a lot of exciting good news, one of the things that I feel might be important is to relate back to what we're all feeling on the ground sometimes, and that is that with these new rules and the challenges that they've created for buyers, sometimes the closing becomes less of a celebration and more of, can we just sign and can I please say it's done? And so it's really important that we be involved, I think personally, to work hand in hand with the mortgage provider or the lender to educate the consumer on the process very early on as to what they'll see throughout the process. Because there's a normal expectation of, here's my packet of information, what the initial application process, and they're not anticipating all of the additional requests that come at the last minute and the frenzy that can take place and so on and so forth. So I think we can play a pivotal role in really smoothing that whole process out. It's all about setting expectations and really being with them through the process.
You made a really important point, Dave, which is setting the expectation and having that team, your mortgage company, your insurance company, your inspectors, etc., and making sure that you guys are communicating within your team. And I learned something just this week from my lender, which I wasn't aware of. They do continuous monitoring of their buyers' credit reports while they're in the queue. So really important information for me to share with my buyers coming online to say, you may think you can afford to go buy those new appliances. Please don't go buy a new vehicle, etc. Because even though we've told you you're pre-approved or pre-qualified, your credit is being monitored daily. And that just blew my mind to find that out. Do you have anything, Francie, with regards to that you guys are seeing?
Well, no, nothing different. I mean, all of the same things. I do think when we are educating that we need to do that as a collaborative approach. So not rolling our eyes and saying, oh, I can't believe the lender asked you for that again. We're all working, the whole team's working for one goal. And so, I think we can almost change the mindset a little bit, education, expectation, but then also being really collaborative and saying, the lender's only asking for this because they're required to. They're not, things like that. And I honestly tell almost all of my buyers, I'm like, you're going to feel like you gave them everything 6 times. you may or may not have done that, but that's what it's going to feel like. And, and they're like, well, why? Well, that's just how the process works right now. And so we can dig our heels in and say we don't like it, but that doesn't get us anywhere. Yeah. So I think really collaborating with the inspectors, with the lenders, and I think especially lenders, I mean, and letting them know.
The appraisers.
The appraisers, and letting them know when you think they did a good job, because I don't think they probably hear that all the time.
Yeah.
So, we all love that, and to tell them, I know that was a tough file, and thank you for closing it on time. Those are little tiny things that make the whole transaction smoother.
Right, and then reflect back on us.
Yes,
so,
absolutely.
Keeping that team intact is important. At the break, we kind of hashed over this next question, so we're, I think, prepared to share with you guys what our thoughts are. Why do you think inventory of condos and townhomes are, they've asked skyrocketing? I don't know that we've seen skyrocketing in every market, but we're definitely seeing an increase in inventory in that sector. What do you think that might be caused by? Francie, you had some great suggestions, some great thoughts about that one.
So I think a couple of things. One is the affordability. People who are no longer able to afford single-family homes in their area can right now, possibly afford a condo, and it still offers them the option of home ownership. I think one of the other things is the condo market was hit so hard by the downturn, and those prices are starting to finally recover. And so I think the investors who held those originally, they're okay selling them now and getting out, and so I think both of those things. In our area, we are seeing several new construction projects. I don't know that that's across the board, but I think those are just some pretty basic reasons why it's probably skyrocketing.
Skyrocketing, yeah. Dave, anything you would add to that?
I really wouldn't. I think that's great insight to it, and I think like you said, the price appreciation is playing an important role in it. And also the affordability factor, so I'd be in lockstep with that, yeah.
Well, and the comment that I made while we were talking was we're seeing rents in the metro market are skyrocketing, whether inventory on condo and townhomes is, but rents are skyrocketing. So if somebody's making the choice to rent an apartment at $1,500 a month, and they have the ability, they have good credit, a stable job, they're starting to understand the value of home ownership, which again is good for us, and it's good for America, it's good for Colorado, so that's kind of exciting to see. I know we have challenges in the Front Range that we're not seeing any new construction in multifamily because of the construction defect legislation, and developers and general contractors can't get insurance, so they're sitting on the sidelines right now. And hopefully we can see some changes. I know Carr is consistently working on that down at our legislature. Our next question came in from one of our members across the state, and wanted to know, for areas where inventory is low, what are some helpful tips you can share with us about buying a home? So we've heard pretty consistently inventory continues to be a challenge. So what are you guys doing to position your buyers? Francie, kind of give us an idea. You talked about educating. How do you get them ready?
So first of all, that's the big thing. I think more than ever, having a consistent approach and really having buyer interviews where you sit down and you know what their hot buttons are, and then being very, very clear with them, what the market statistics are, what the average days on market are, what a competing offer situation looks like, because it can be disconcerting. And so I think, before they set foot in a house, to kind of have set scenarios and expectations, again, Dave, of, what they can expect. When they're actually viewing a home, number one, they should never buy a home just because it's getting 10 other offers. and I do think that brings appeal sometimes.
Yes, yeah.
And then they're like, well, this home, only has 2 bedrooms and we need 4, but
we could win.
Exactly. So I think, making sure that you're only showing them things that do actually meet their parameters, and then having them well enough prepared that if they do need to submit an offer immediately, you have that stuff. You have a pre-approval letter. You have their terms that they're going to want, the standard terms they would want in a contract. And then I think when you're actually viewing a house also to say, what does your gut tell you about the price of the house, about the competing offers? You know, because we are the experts. So, you know, if we just say, well, you know, do you want it? That's a tough call for them when they already feel the pressure. So saying, you know, to them, okay, you know, this does meet all of your parameters. Here's the asking price. We already know there are other offers coming in, likely going to sell at or maybe even above asking price. What would be your comfort level? You know, having them comfortable with even, I don't know how often you guys in other areas of the state use acceleration clauses. They're very common in our area.
Are they?
And so making sure, number one, you have a well-written one if you're going to use one. And number two, that your client understands.
What does it, yeah.
What does it mean? And you know, so I just think it is mostly education. And you know, do they have that feeling of, yes, this could someday be my house? Or are they just feeling like they have to buy something?
To buy it.
Because, you know, the last thing you want is someone not happy after the sale closes.
Right.
I mean, for me, that's something I would avoid at all costs.
Yeah.
So,
most definitely.
Right.
Yeah. It's not about getting them into the house fast. It's getting them into the right, house at the right time. Yeah. So what do you
those are all
thinking?
great points. I think what I would piggyback that with is for me, and my personal experience has been, I've always considered us to be the emotional barometer in the transaction. We do this every day, and our clients look to us with how, you know, a concern of how is this going to work? What just happened to me? Is it like only me that this happens?
Right.
You know, and things of that nature. So I think by sitting down and having that first counseling appointment, whether it's a first-time buyer or someone who's very experienced, I mean, you develop it individually for your, you know, respective client. I do think, though, it adds quite a bit of value. And then as things happen through the transaction, if we become the emotional coaches of even barometer, you know, this is something we see on a regular basis, this is how you deal with it, empathize versus sympathize, in other words, have solutions. I think those things are very, very valuable in the transaction. And I think the other thing that we talked about earlier during the break was we go to a house, we go to a restaurant, we go to dinner, we sit with a friend, and we always hear, oh, it must be great to do what you do right now. It's got to be so easy with the market, you know, as busy and, you know, and wonderful as it is. When you start to dive into the nuances of what it takes to get your client a house in today's market, you know, what do I as a realtor have to do to advise them properly in preparing an offer that we might actually get this house? You know, the pressure's there, and really when you rely on, as you mentioned earlier, mentors, people within your office, you know, educators, and I think constant education. I think this market offers equally as many, if not more, challenges than our downturn market offered. For us to be professionals and consider everything that goes into it. How do you handle the tough inspection issues? Are you still going to houses to meet with the appraiser? You know, all those things that come into line with how do you prepare something. What's the difference if someone's going forward with one particular type of financing and there are appraisal issues that might follow that particular offer versus another type, and so on and so forth. So I think those two things I would probably just share in unison with the great points that you made.
I don't know about you guys, but in the midst of the second quarter, when we, on the Front Range metro area, were facing the frenzied market, did you guys use what I refer to as love letters or letters from your buyer to your seller?
I did not use them myself, but I did receive several. My clients did. And I will tell you, being the emotional barometer, if I had competing offers, I basically did a spreadsheet because I feel like that's an emotional decision versus now if I would tell them they were there and they could read them at any time, but I didn't put it right on top.
Oh, well, I'm going to take note of that if I send you an
that's
offer.
Right. Don't send me a love, no. But I really do feel like that, in my opinion, is part of being the emotional barometer is, you know, here are appraisal issues, especially if you are at or above asking price. Here's the lending they're using or not. Those things are the most important parts of making that decision. And then certainly, it's not like I hid them, but I just feel like when they're looking at, you know, at 6 to 10 offers, to try and then bring in 4 love letters is hard. Now, I will tell you, when I bought my first house in Colorado, I wrote one.
Well, well, I find it interesting because we had a situation where we received multiple offers. I think we were between probably 7 and 10, and we received several letters from the buyers. And what I found, it was an estate situation. It was children's. They were selling their parents' home, the home that they grew up in, and they needed that connection. And that connection provided them a clearer path to making the decision. And they asked, can we go back to this offer, which is not as favorable, and ask them if they will meet this offer, because we'd like them to have the home. So I think, as statistical as all this discussion is, we still bring the human side into the transaction. And I think we would all be remiss in thinking that when people buy a house, there isn't some level of emotion, which is why you're the barometer, because they walk in and all the parts and pieces are there, but they don't feel it. And it's just not their home.
Exactly.
So I found that it's been very effective, certainly on the Front Range, if you have a client that can write a good letter. I've had one that didn't come in so good, so we had to do a little revision, but they weren't writers, you know?
Yeah,
So
and
they
that
work
happens.
well for you, though.
Yeah, they've worked really well.
I think the two of you have hit on exactly what was going through my mind as you spoke, and that is, if you're a buyer's broker, because I don't know if you'll be a transaction broker or a buyer's agent, so we'll call it buyer's broker. If you're a buyer's broker, nobody has the insight to what the seller's thinking on the other side. So including any key ingredient that might have some value, because while I, like you, share the very statistical, let's break it down, let's look at the analytical side of this, there are people that not purely, but will connect strongly to an emotional situation that will do exactly what you talked about. So I think it's a key ingredient, because as we talked about earlier, any tool in your toolbox right now that you can use to help somebody out, I think is great. And I think stepping outside of my own zone of who am I and how would I deal with this is very important, so that I don't forget to include a recommendation of a letter or something like that.
Yeah.
So along with, sorry, not to interrupt, along with what you said also, when you do use a tool in your toolbox, make sure you're good at using that tool.
Yeah.
Like, you know, when you said I had to...
Insincerity doesn't work in those letters. You know,
No,
they have to have
or
some
poorly
real
written
connection.
ones or things like that. So again,
if it's going to harm your client, you probably don't want to forward it, but let your client know that the reasoning behind, right? Well, excellent. All right, let's see what other great questions we received from our listeners today. Do you feel the rental markets in your area are impacting home sales? We've talked a little bit about this. Anything that we would want to add regarding the rental market?
Emphatically, yes.
Yeah, I would absolutely,
without question.
yes.
Everything from driving more buyers to buy for the reasons that you've mentioned a couple different times. The affordability of rent is mirroring the affordability of home ownership. So they're going to move in that direction. I know I personally work with a fair amount of folks that are investors, and with the cash flow possibilities that exist today, and the fact that we're really just getting back to levels of valuation that have already existed historically, really leaves a window of opportunity in a lot of people's minds for further growth and appreciation. So it's a very exciting time for investors, I think, as well.
That's a really important point. Making the point that we're now just getting to some of those values that we've seen historically, and that there is a gap there. That's good information. Thanks.
Well, thank you.
Did you have anything, Francie, with regards to the rental market affecting?
I don't think much to add. I think we've pretty much.
So can you guys share what has swayed your sellers to pick one potential buyer over another? We've touched on kind of the buyer side, how we position them. So what are you guys seeing from your sellers?
Oh no, I'm not going to share that.
All right, I'm going to see what Francie has to say, and we'll get back to Dave in a bit.
I think the overall picture is, I think, in general, what will almost always sway someone, and that is, you know, offer price, and that's always what they want to look at first, and that's important, it is. But I think, again, the education on the front end, even for your sellers, okay, if we get competing offers, price isn't the only thing that affects a contract. So I know when we've dealt with competing offers, and especially, you know, when they are at or above asking price, My sellers at times have been concerned with appraisal and the lending that goes along with it. And you know, unfortunately, I can say I've had several, and I don't know that it's unfortunate, it just is the way it is, but a cash offer at a lower amount, you know, is more appealing to them than a financed offer at a higher amount. And, you know, and that's what I think puts some of our more traditional buyers kind of at in a not as advantageous position. So I would say that. And then I do think timing too. You know, sometimes sellers right now need time to find a house, and so sometimes they don't want to be out in 30 days or, so I think timing's a big one, and then just the whole lending versus cash offer price. Like, I think that's kind of a package for people.
Yeah, the financing terms and conditions.
Yeah.
Anything else
I
that
actually
you're
do
doing?
have some stuff.
I hope so. I hope so.
I think I kind of break it down, not to reiterate that I'm an analytical person. I do tend to break it down, though, to the offer is going to be presented by a realtor or a real estate agent. And I think as such, the better quality of preparation in the offer, the key ingredients, you mentioned price, you mentioned timing, you know, your offer can present that you are very astute at what you're doing, or your offer may not present that you're very astute at what you're doing. So I think that's a key ingredient, because at least a good portion of the response of the seller is most likely going to be based on the response of their broker saying, here's the strengths and weaknesses that I can see in the comparison, and so on and so forth. So I think that's a very, very strong comment in terms of the key ingredients there. And then I think it's the little nuances right now, and it isn't all price. So I think it's everything from considering, is it a type of loan that has potential effects down the road if the appraisal doesn't work out? Is it a timing issue? Is it, you know, looking at clauses that are in the contract that are maybe either not common clauses, which can be great, they can be advantageous. You mentioned acceleration clause, I call it an escalation clause. Things of that nature I think are of interest to a seller. They just need to wrap their head around what exactly those mean and entail for them. So I think all of that stuff comes into play, and then there's the occasional clause or addition to a contract that maybe sounds like the needle across a record, if I can go back to my generation, where you all just kind of sit at the table and you go, I'm not sure what to do with that. Those would be the ones that I would say you definitely want to avoid at all costs.
Writing clean, consistent
I
offers.
was going to say clean contracts that the selling broker, or the listing broker, I should say, doesn't have to dig through to try and figure out what you're doing. You know, as being a buyer broker, write a clean, consistent contract that doesn't have loopholes, that doesn't leave questions.
Yeah, it's not all about conceding everything.
No.
You know, and sacrificing everything for your buyer. It's really putting a good structured offer.
HOA stuff, make sure that's all in there, it's correct, everybody's on the same page with that, and all those little things do make a difference.
Right. And I think it's a reflection of our level of expertise to that other agent, which is what you said, Dave. And that's important to our consumer. And again, hopefully today is empowering you guys to be that exceptional realtor. We have a couple more questions, and then we'll get this wrapped up and get you guys out into the field to assist people in buying and selling houses. Interesting question. You hear that it is a seller's market, but you also hear that sellers are dropping their asking price only to engage in bidding wars. What do you think it says about today's consumers? It's kind of a loaded question. Francie, you want to tackle that one?
Yeah, so I would say I don't think I have a lot of experience with my sellers wanting to drop their price to engage a bidding war. And maybe that is just personal to me, or maybe I don't know. And I do think part of that is also in the education, like, you know, be careful what you wish for, kind of there. So I do think, though, and we are, you know, buyers and sellers are becoming more and more savvy. They have more insight into the process. They have all the information they need. So, you know, I do think we need to be prepared for these questions. And how do we as realtors say, okay, we can do that. and here are the risks and here are the benefits, just like if someone wanted to inflate their price to begin with and then they can drop it later. It's just the opposite discussion. So whatever they come to you with, dig in your toolbox and understand, that they need to be educated on the risks and the benefits of any of these types of approaches. Because I do think a buyer walking into this situation automatically feels kind of defensive. If they, if that's what they feel is that the price was dropped to encourage a bidding war, I think the buyer feels defensive immediately. And so then again, that whole collaboration of all working towards one final goal, I think from the get-go, you've kind of set up this type of situation. So that's a technical term. Yeah. So
Writing that down.
take notes in case you need to use that later. You probably need to put that in a spreadsheet somewhere. Pretty sure. So, but that would be my humble opinion on that.
Yeah, are you experiencing this?
I experienced it more early on in the transaction. I think before we ever arrive at a seller's kitchen table or appear on their iPad screen, as the case may be nowadays, I think what we're seeing is that they are bombarded with what they see on television, what they hear from friends, and they have a couple of questions of what strategies, and maybe even a preferential strategy that they're like, I'd like to go this direction, what's your opinion? Things of that nature. So I think being prepared for it is an important part of it. I always liken back to what we commit to as realtors in our code of ethics, and that is simply that we will never mislead someone about the value of the price. So I think we present the facts and then develop a strategy from there. It's their house, it's their decision in terms of that. But I think overall what it says about today's consumer is exactly what you pointed out. They're educated. I don't think they're really any different than they ever have been. They gather what facts they can. They come to some game plans. They, much like you folks have done here, sit down with their preparation of questions before we get there and go, is this the direction we should go?
Yeah. Well, and I think, like you said, Dave, and Francie as well, it's a strategical decision that as their realtor, you want to give them the best guidance. And I know the expectations in the front range are that sellers should be receiving multiple offers. And when properties are not receiving multiple offers, now the buyer is afraid to like it because something must be wrong with it, right?
Because it's still on the market
for
3 days.
Yeah, I was going to say, if it's been on the market for 3 days,
been on the market 3 days,
yes,
must be a problem. And then you have sellers who are anticipating a multiple offer scenario and it doesn't show up, and then they're wondering why. Well, because they probably didn't hear your whole presentation. They were focused on one aspect. So it's always a challenge, which obviously gives us all the opportunity to have a job and to help our consumers navigate. And again, just giving us more value and being prepared, which is hopefully what we're doing here today. We've got just two short, one question is going to be kind of fun and we'll wrap up with that one, but just real quick, price ranges, what are hottest in your area? I think we're seeing some consistency statewide. What are you seeing, Dave? Hot markets?
I would really, you could segment the market pretty easily from the 500 and under and the 500 and over, and then one additional segmentation might be close to that, luxury, $1 million plus. If you wanted to simplify the answer to the question, there's sub-markets within that of your, affordable housing, your first-time buyer, your initial move-up buyer of the 400 and under. I'd say that pretty much, but I would say in those parameters, the 500 and down, and certainly the 400 and down are our hottest markets. Yeah.
And I was going to say probably 350 for us and down. Again, we're actually pretty decent up to about 7, and then for us, that's more of a luxury home market above that. So, but yeah, I would definitely say 350 and under, still extremely competitive.
Yeah. Well, and I noticed Jay had mentioned in Colorado Springs under 200,000, and I think here in the metro area we don't know what 200,000 looks like. So
we used to say that in Fort Collins.
Yeah,
we do know what it looks like. Just often the buyers don't get out of the car.
Right. Well, and then a car. Well, and Francie used the terminology. I got to find it because I wrote a great note. Drive till you qualify. So if we're having a struggle, we can just send them south, right?
Yep.
Because they've got inventory. Or east.
Northeast.
Northeast. Yeah. All right. This is, I think, kind of a fun question, and let's see what ideas you guys have. Curb appeal has always been high on the priority list of things you must do just to get people to want to view your home. When buyers getting frustrated and anxious in a bidding war situation, How important do you think curb appeal is in today's market?
I actually think it's still really important. Just for the very reason, from a selling standpoint, from a listing standpoint, if you want every single potential buyer that drives by that house to want to go in and look, and they need to want to go in and look because they want to, not because they think they should. And so I still think curb appeal is huge. Now, are there probably instances right now where people don't really do much and they sell their house anyway? I'm sure there are. But if I were talking to my seller, I would say absolutely still extremely important. And it's important even for the appraiser that's going to walk in and the inspector that's going to walk in. And, they have emotional reactions to things too. So, if they walk into a well-prepared home, it has to put them at ease a little bit.
Yeah, I was in an appraisal class and the appraiser said, if you don't think it matters what the condition of the home looks like at the day of the appraisal, you are being ignorant and incorrect because, like you said, Francie, they are struck emotionally as well. Dave, what do you think about curb appeal?
Quick note on that, if you don't mind.
No.
Appraiser, I've spent as much time as an hour and a half at the kitchen table with an appraiser in a house. So they are such a key ingredient to the whole thing, and having everything, all your ducks in a row in relation to that is important. I think a shortcut is a shortcut when it comes to curb appeal. And I think the biggest thing is the shortcut on the front end is a shortcut to the seller on the back end, because they're not going to receive their full potential for what the property may draw. And that may not be their goal. Their goal might be, you know what, I don't need to go to the nth degree, I just want to get it sold. And there are sellers that are like that. At the same time, an additional reason to go through the effort would be minimizing the issues, whether it be from inspection and so on and so forth. And I truly think when a buyer walks a home, I think if you were with a buyer when they walked a house that they were looking at to buy, they would not want that same perspective applied to the house they're living in right now. In other words, their perception is very, very different of what they're expecting in a home. And they're looking to be impressed, especially in a market where, they're about to pay, most likely, a top dollar or premium price for the house.
Exactly. Great points. I know there's a few questions we didn't get to, and we would encourage you to continue to bring in your questions, and we certainly will do our best to email you back some results to those questions, given whatever time we have left in our day. But I want to thank Francie and Dave for participating today in the webinar. Hopefully we have empowered each and every one of you with a couple of key ingredients that will make you better realtors and hopefully make you another $1 or $2 as we close out the summer selling season and move into the fall. Again, up on your screen is where you can get the reports for Q2, ColoradoRealtors.com, housing statistics. And we've just touched on some of those statistics today for you, but delve in because I'm sure you'll be able to find a lot of valuable information that you can use locally in your market. And again, if you want to drill down, go to your local association or board, and they will have reports that drill down to some cases neighborhood levels. So again, thank you for joining us today, and we are excited about our market statewide, and we hope to continue the improvement and some money. See you soon. Bye.
Thank you. Bye.
Bye.
Thank you so much to our three panelists for their time and expertise this morning, and thank you all for joining us. As a reminder, cumulative statewide reports and regional summaries can be accessed at coloradorealtors.com. Localized city and neighborhood data through this program can be accessed through participating local associations. You will need to contact your local board directly for that information. We hope you can join us for our next presentation on July 30th for an update from the HOA Information Office. We also have some other great topics, including foreclosure auctions, radon, and VA home loans that we'll be featuring over the next few months. We invite you to follow us on Livestream by clicking on the green follow button on the right-hand side of your screen. Or as always, you can view and pre-register for future webcasts at coloradorealtors.com. That's it from here. Take care and have a great rest of your day.
The first thing is the people. Obviously, this business is about the connections you make and the people you trust. And the most important people that I trust in this industry are at this company.
The new beginning. Other companies are doing things the same way they've always done them. And so having a new opportunity to do things a different way is what really intrigued me.
I'd say from a sales perspective, what I love most is that we have really the best of both worlds. So we're a big multi-billion-dollar international company with great financials, but on the other side, we also feel very much like the small little family-run company.
I like the safety of First American, but they've got a human side to them, you know, a little softer, gentler approach, and I really appreciate that, and they've really given me a great opportunity to go out and try and build something for them.
In Colorado, guess what? We're all local. There's 4 local underwriters, and together the other day we have almost 125 years of local underwriting experience in Colorado. And I tell that to people all the time, and that's really the big difference. We can make local decisions quickly to get that deal to the closing table. That's the big difference.
We're a team, and we support each other and look out for each other, and it really promotes more business for us.
First American is all about a work-life balance, and the leadership is incredible because they truly care about the customers or the associates that work here.
This is our customer service department, and the marketing support services that are just completely robust. Marketing is a challenge for a lot of real estate brokers. It's something they have to do, but it takes a lot of time. It can be expensive, and we have a fulfillment solution that is far and away better than anything else that our competitors have to offer.
The leadership is very down to earth, and they move very quickly. So anytime I've needed something or had to support a customer or had to make a decision that maybe cost the company money or whatever, they're very quick to make a decision on that stuff.
You're working with people who have been in this market, in the Colorado market, for 30 plus years. At one point, First American was underwriting almost 70% of all transactions in Colorado, and some of those very people were working on those files.
I really believe our people are passionate about our company and do it better.